Next guest is standing pat. He's not selling any rallies, but he's also not buying the dips. He's sticking with quality names until the dust settles. Welcome in Jeff Krumpelman. He is chief investment strategist at Mariner Wealth Advisors. So, Jeff, you're not buying, you're not selling, you're just like sitting in a chair with like a lamp behind you.
Well, I'm doing more than sitting in a chair with lighting, improvements maybe that are needed. But yeah, we feel that the appropriate thing to do here is know what you own and assemble your buy list so you're ready to see if this thing has legs and is real. It fizzled in the summer. It sure felt good when we had that rally. There are a lot of signs that the market wants to bottom. We like the shift in leadership that's more risk on than it was. We like the breadth that we're seeing. But I think until, you don't fight the Fed, until investors truly see the data that we think we see, which is calming inflation in the forward-looking inflation data, and comfort that the Fed indeed can pause after a couple more hikes. Until that happens, I think that it's just too risky to say I want to aggressively add to stock exposure.
Well, given that we know the data, it's something, and I'll misquote it, I'll butcher it, but you'll get direction. I'll be directionally correct, as they say. If you miss just the best 2 or 3 days a year, over the 20 years, your returns are cut down by half or something like that. So you're advising, I would imagine, your clients stay invested. Don't sell, right? I mean, because then you're going to miss like what we've seen the last couple of days, which is a 7% rally for tech.
That's absolutely right. So what we did coming into the year, we really did think that we were likely to see a correction. And it wasn't just one of those just cause statements that can happen anytime. We saw the transitions that were underway on the part of the Fed and accelerating inflation. And we had 3 years of double-digit returns. So those outsized returns over the last 3 years very well could have taken you well above your normal long-term strategic target. If you were a 60-40 investor, you might have been 70% plus in stocks. We said going into the year, hey, we allowed that to kind of run last year. Let's take that off the table, go back to normal. So you're right, you're in the market, but you're not going to suffer if you did that from regret of trying to be greedy and staying at that upper end. By the same token, when that market pulls back, if you've trimmed back just a little bit, it's going to give you the confidence to say, you know what, I can step in at the right moment. So you're right. I think hold your ground is absolutely appropriate so you don't miss out, but you also aren't overly greedy.
Yeah, or look at some of these, and I hate to use the term boring. I don't want to offend their employee base, but companies that are very quiet, like a Danaher, right? One of the names you like. This is one of these big industrials, a mini GE, although maybe better run than GE had been in the last few years. They don't do hardly any media. They just kind of grind it out, produce free cash flow, and kind of let their work speak for itself.
Yeah, you have consistent earnings growth. They're in life science tools and diagnostics, and then also in water filtration that is used in healthcare and part of the biotech companies, and benefited from vaccine development and other things. And so it's just nice, consistent growth. I'd also say, Brian, we were kind of laughing last time I was on here about Starbucks. I mean, you got 12% same-store sales growth at Starbucks, and as we go back to work, people are drinking caffeine. That's another great example. And then we got names like Eli Lilly that are in there, T-Mobile with 30% growth, and yet it's priced at 23 times. It's great to be boring again, and we're seeing opportunities in those boring areas, and it's kind of fun to go back to some old-time stock selection in those groups.
Yeah, that's it. Danaher, T-Mobile, Starbucks. I know a couple other names you like Eli Lilly. We'll get in next time. Jeff Krumpelman, boring is the new red hot. Jeff, thank you. You're not boring. Appreciate it.